Canada makes the 1990s look like affordable housing. This real estate bubble just got even crazier. So let's get right into it. Really interesting. Better Dwelling put out this, but it's actually RBC's chart that I want to draw your attention to here because it's kind of crazy. So RBC is a big bank and they're going to come out and say everything's really bad. We're not to blame here. We weren't the ones that were lending loads of money, letting these people have loads and loads of debt. So they're just completely indebted. RBC Housing Affordability Measures Canada, ownership costs as a percentage of median household income. So it basically has three lines there: single, detached, aggregate, long-term average, condo, apartment. So you can see people are paying like insane amounts historically for housing right now. Like, even if you put the long-term average, they're saying is above 40%, which is absolutely nuts that people would even spend more than that on their home, on their shelter costs. But it is the reality in Canada. That makes you incredibly at risk, or if anything happens in the economy, right? Because if something bad happens in the economy and you're paying so much for housing, you can't sustain that payment anymore. And I think, as you guys know, we're in a recession right now. We can see the personal savings are absolutely cratering, and we're going to get onto that. Credit card debt has gone parabolic because people have run out. The pandemic savings are gone. The credit card debt is going up through the roof. People are running on fumes. They're trying to live their same lives. They didn't do this as badly as they did it right now in 2008. I want to highlight that. Yes, there were people trying to live way beyond their means, sustained on living off fumes, essentially, back in 2008, but not as bad as today, because literally today, there's zero responsibility. Nobody's responsible. I'm not responsible. Blame the Bank of Canada. Blame the federal government. It wasn't me who took out that debt. No. It was somebody else's fault. And that's the reason we're in this such shitty situation right now. For most people, anyway, I don't really care because I haven't got any debt, so it's not going to bother me. But it's absolutely crazy, and I feel for the people in the rental market. And I also feel for the people who are going to get screwed over completely. So I want to show you this because this kind of illustrates, right, how ridiculous this bubble is. So you've got Niagara Falls in Canada right there, and then you've got Niagara Falls in New York right here. And even, people will say, oh, there's so much crime across the border. Look, I've been to both these places, right? So you can't fool me on this. I know what it's like over the other side of the border. It's not like you're going to some crazy town, especially if you get out of actually Niagara Falls NY and you look, oh, look, you can buy a house for $245,000 here. Just outside of Niagara Falls NY. Looks like a nice house on a big lot there. Not bad, $245,000. How much is that house going to cost you in Canada, where there's an absolute huge real estate bubble? You see, and what I want to highlight to you is the market in New York, across the border right there. That is attached to fundamentals. That is definitely attached to fundamentals, because if you look at the median household income in the US, you're talking that house is 4-5 times the median household income. Okay, so let's take a look at Niagara Falls just across the river here. So for the same sort of thing, let's try and find something that's kind of equivalent here. That looks like a shed. So we'll just take $650,000, right? $650,000. The average income is $67,000. It's not that different to the average income across the border in New York, but this is completely detached from fundamentals. And you can't tell me that all the immigrants that are coming in are pouring into Niagara Falls. I call bullshit on that, okay? So there's so many stories that people put out, and people try to rationalize the bubble. People try and make sense of a housing bubble. But listen, you're never going to make sense of a housing bubble. It simply is a housing bubble caused by bad lending. The lending standards standards just go down and down and down as the fraud goes up. And the reality is, when your economy heads south, that's when you get caught swimming naked, as the saying goes from Warren Buffett. You know, the tide goes out, you see who's swimming naked. And that is exactly what we're about to see happen, unfortunately, because a lot of people have been swimming naked in Canada. So, you know, you can see the difference is just absolutely massive. And you can see right there two markets that are completely detached. No, not two markets, one market that is completely detached from fundamentals. And I want to draw your attention to this. This is US household debt to GDP. Why is this important? I want to draw your attention to back in 2008, this peak. You can see that US household debt to GDP is around 100%. It still remains elevated right now, but it's nowhere near as bad as it was in 2008. So some areas, like in New York, they're probably way less exposed. Like, even when the real estate prices do go down in the US, because they have been going down, and there's certain really big bubbles in the United States as well. But definitely in New York, it's not a bubble in that area of New York. So there's different areas which aren't in bubbles. So it's kind of interesting when you look at this chart, because you can even see that on this chart, because we're not back at the highs that we saw in the massive real estate bubble where everything was inflated in the United States. But if I take your attention to Canada now, you can see that we peaked, which is a bad sign, because if I go back to that US chart, you can see that we peaked, and then guess what happened afterwards? Not good. Debt destruction, and that means asset prices go down. You've got Canada household debt to GDP right now. It went way above. It went near to 120%, which is just unbelievable. The US never got that high. You can see that right there. The US is below 80% right now. Canada is around 100% still. Even after passing the peak, it's still at where the US was at the peak. So it just goes to show the crazy dynamics that are going on right now. There are so many people asleep to this. There are so many people that say, oh, it's the immigration, it's this and it's that. And it's just, you know, it's bullshit. It's complete bullshit. They don't have a clue what they're talking about. This is a real estate bubble, and it was caused by rampant lending, and it was caused by massive speculation. That's what most of it was. Those other things that people point to, yeah, they're contributing factors, but they are not the main cause of it. And that's what's always hilarious about real estate bubbles. Doesn't matter where you go, United States, Mexico. When you travel and look at real estate in different countries, it opens your mind up, because you start to hear different stories, same thing happening. Like, US home prices went down last year as well. So did Canadian ones. US home prices are going up. They've popped up in certain areas, just like they are in Canada right now. You know, it's not the immigration problem in the US. So what is it? You know, it's just that people just don't get it. They have their head buried too much, and they just need to open their mind up to the world and realize this is a global debt bubble, and it's those countries that are most exposed with the most debt that will get fucked the hardest, just like in 2008. That's exactly what happened in 2008. That's why Canada got off lighter than the United States, for example, because it was sitting where the United States is right now. So it's kind of nuts when you come to think of it. And then if you look at the household savings rate, I mean, just look at what has happened over the past 3 years. You have literally plummeted from 14% to 2.9%. So that booming economy that you had was partly because of savings that people had during the pandemic. It was distortions created by the government because people weren't even paying their mortgage. They were living on a completely different planet. And this is the thing. There was so much stimulus flooded into the economy that it just artificially distorted everything. It made the economy look great. You and I know this, but the central planners, they can't see this. The authoritarians, the Bank of Canada, all these people, they don't understand this. They still keep saying it's a robust economy, everything's fine, everything's going to be fine. Have you seen the household savings rate? They were pointing to savings last year. Do you remember that? They were saying, oh, we got high household savings rate right now. Everything's great. Well, have you checked that fucking recently? Because it's right down at 2.9% right now and it's crashing. This is delayed data, guys. This is delayed. There's a lag to this data that I'm talking about. So where the hell do you think this is going to be in 2 or 3 months? Do you think it's going to be going parabolic again? No, it's going to be absolutely cratering, probably to the lowest level. My guess is that this chart has ever seen, going back to like the 1950s that you've seen on it. So right now where we are is we're just in this crazy place where essentially everything, you got a lot of people out there that are just in denial to what is going on in the economy. Maybe they're not affected. Maybe they're not looking at it. You know, two people can see situations in two different lights. And I've always been a realist in my life. You know, I will call things shit when they're shit, and when they're great, they're great. And the economy is not good right now. People comment often on this channel and say, why are you all doom and gloom, blah, 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 blah. It's not that I'm doom and gloom. The people who try and make things look better than they actually are, like the ones bullshitting people to move to Calgary, like that's going to be some get out of jail free card in this next depression. It's like they're pretending everything's okay. Yeah, just come here. Everything's going to be fine. You know, your support network's going to be fucked. You're making a huge risky decision going into a depression, recession, but everything's going to be fine. You're going to be okay. We all know we can call bullshit on this. So, you know, I really got to stop swearing so much because I am just on fire with my language tonight. I think I've sworn too much. So I wanted to show you this. This is actually in the US, because in Canada, of course, I could swear again here because it just pisses me off. But the thing is, in Canada, we don't have charts for credit card debt. You know, we have to rely on obscure reports that we get every quarter that are looking back like 2 quarters. So they're not accurate. We know that credit card debt is increasing at a massive rate. TransUnion, Equifax, they've both reported it, heading to new highs in Canada, or already at new highs. But you can see in the United States what happened before 2008. Credit card debt went up. And again, why was that happening? The economy was getting bad. People still wanted to live like they have for the past 2 years when things were artificially distorted. And guess what? They start piling on credit card debt. They start running into their savings. How many people even know whether they're cash flow positive or cash flow negative for the month? How many people? Nobody, barely anybody. Like the 10%, probably a lot of people on this channel are doing that right now. They know their expenses. They've got them in a simple spreadsheet or whatever. That's what I do. And they know how much they can save. They know how much cash flow they have. They know if they're living paycheck to paycheck, and they can prepare. They know, okay, things are going to get shit in the future, but I know now I'm living paycheck to paycheck. So I have got to do something about that to increase my income, whether it's going to cut lawns or shovel snow. You don't need to have a degree to do these jobs, but they're easy jobs that you can do and get money for fast. People want these jobs done and are always going to want these jobs done. So the thing is, this credit card debt chart, it's really important, I believe, because what it shows here is how it builds up when you're coming towards that recessionary point. And then Q4 2008, that was when it peaked, and then it all went bad. Now, the thing is, why is it all going to go bad, guys? Why? It's because the economy goes south. Now, it's not just mortgage debt. This is the scary thing, and this is where I think the yield curve and why it looks so bad right now is because essentially the yield curve is telling us this is going to be like a really bad recession, if not a depression. So's the money supply telling us the same thing. So why is that? And I think it's because it's going to be a full-blown credit crisis. It was really contained to the mortgage and securities markets in 2008, and countries that weren't too readily exposed to that in 2008 didn't suffer as much. But now we've got student loan debt, credit card debt, auto loan debt. Because nobody, after 2008, they didn't fix the problem. They just said, hey, you know what? We'll drop the rates down. We'll give you more credit for everything. So you can go out and buy that car now that you can't afford to buy cash. We'll just finance it. You can finance everything. Even if you want to buy clothes, you can pay later for it and finance it at some astronomical interest rate. But the fact is, this is like Great Depression stuff. This is actually what happened during the Great Depression. The buy now, pay later thing, that was before the Great Depression, in the roaring 20s when we had that. So it is just kind of nuts. We can see the problems everywhere. But here's the thing, guys. I am optimistic for those that aren't in debt. I think the ones that aren't in debt are going to come out of this way stronger, but they're going to be looking around them and they're going to be thinking, man, everybody is in pain. And why is that? Because everybody is in debt. That's what we know. So anyway, if you've enjoyed this video, guys, get rid of that. You might like that video there. You might like that video there. I will see you in the next one. Take care of yourself. Lots of love. Bye-bye.